Good Sunday afternoon, folks. In this short video, I want to focus on the US dollar and the possibility that a rally in the dollar will affect the price of gold and subsequently the mining stocks. And so I tend to focus on short-term charts and, for example, the 4-hour charts, 4-hour time frame that I share in the Market Pulse newsletter. It's good to keep the bigger picture in mind, and so in this chart we've zoomed all the way out to the monthly time frame. And so on this time scale, we can see that the dollar has been trending gently upwards inside this relatively wide channel. And so at this point, we are down at the bottom of the channel, which means, the dollar can do whatever it wants, but to continue this pattern, if it's going to continue, the dollar needs to rally or at least continue trending gradually upwards. And so that's this pink price channel. If we look at the blue dashed pitchfork, this is a shift pitchfork, and we can see that price or the dollar is sitting on support, the lower median line of this shift pitchfork. And so from a pitchfork trading perspective, a rally back up towards the median line of the fork is not unreasonable to expect. Energy based on stochastics obviously is very low. Perhaps a good sign. It looks like it could be turning up from here. MACD just about in bull mode, both signal and indicator lines above zero. It's very close. That one's actually below zero. Obviously still on a sell signal. And so there's and so anyway, the potential here is that the dollar is ready to rally, and that it could rally all the way up to median line of this pitchfork is, that's back up to 100, which would also, we'd be bumping into potential resistance from this prior highs. And so, we'd have two things going on as we got up to that level. But that's what we're focused on here in this video, is the idea that the dollar could stage a strong rally from here. If we zoom in, so now we're still looking at the US dollar. We've popped down to the daily time frame, and let me start with in this time frame the dollar is very oversold. And so if we focus on the moving averages, and so in the daily time frame we look at 50 and 200 day averages, and so price, the dollar, is well oversold from the 200-day moving average. And so a reversion back to the mean, back up towards the 200, is not unreasonable to expect. So let's get the moving averages out of there because it clutters up the charts. So daily time frame. So again, we've got some room to rally, and of course, it looks like that's exactly what price is doing already, is rallying. We're going to run into several layers of resistance up at the 95-ish level, but we've got a ways to go before we get to there. So So anyway, there's certainly room for a rally in the daily time frame before we hit any resistance. Um, Energy is elevated and headed rapidly higher. MACD is on a new buy signal. Still, the indicator is in bear mode because both lines are below zero. But a new buy signal as of Friday. Let's see. And so if we get a rally in the dollar, it's reasonable to expect that that would affect the price of gold, of course, in the U.S. dollar. And so let's just take a look at gold. And again, we want to keep the big picture in mind. And so we're on a monthly time chart of gold, so definitely big picture. And let's not lose track of the fact that gold, although it hasn't done much for us lately, in the big picture, let's keep in mind that gold has broken above the highs that it made back in 2011 and is now consolidating above that level. So this is actually very positive action going on currently, where gold is establishing a new base to move higher from. And of course, that next move higher, I would expect to take us well towards the $3,000 an ounce level. Yes, it's going to be a big move, I would expect. And so if we zoom in, let's zoom in both in time. So now we've dropped down to a weekly time frame, and I want to show that this dashed line is at the level of these three prior peaks. This is back in late 2011 and then early 12 or through mid 12, as gold was testing this level from below. And so that level is about 1790 or so. And anyway, the point is that all the way down, even as low as 1790, gold is doing just fine in this consolidation. So hopefully you can see that even a price move down here to 1790 is not going to invalidate this consolidation with the expected move higher subsequently. So let's just keep that in mind for gold. Now ideally that doesn't happen. Ideally price stays above 1840, say. That's the solid pink line, and then ultimately, whatever time frame that is, gold moves higher from there without dropping below the solid line. So the mining stocks are still very overbought. Back in early August, that's here, to imply here, because we're in the monthly time frame. Yes, so that's here. The mining stocks were extremely overbought, and they're still correcting from that overboughtness. And so based on, we've got this horizontal support and resistance level, that's this black dashed line. Seeing price pull back to there would be okay. It could also, depending on how long it took, it could test support down here at the bottom of this the blue Andrews pitchfork. Being impatient, you know, those of us who are following mining stocks, we don't want it to take that long before the stocks head higher. But from a technical perspective, um, that wouldn't be a bad thing if price headed lower from here. And of course, if the dollar heads higher and gold heads lower, the mining stocks are likely to follow the gold price lower. So that's I think enough rambling about the dollar and gold and the mining stocks. Enjoy the rest of your Sunday. See ya.